Well, keeping it with earnings, then we had Sterlite Tech that delivered its fourth quarter performance, fourth quarter numbers, pardon me, yesterday in post-market hours. The stock is taking a bit of a beating. It's down by about 2% in trade, but the profit after tax has jumped actually quite a bit. Let's bring on board Mr. Mihir Modi, the CFO of Sterlite Tech, to talk about the numbers. Mihir, hi, good afternoon. Hope you're keeping safe and doing well. I think it's been a rather good exit to FY21, considering all that we have seen. However, just as we enter a new fiscal, there seems to be another wave or a tsunami, if we could call it that. Do you see any kind of impact of that on your business?
So first of all, thank you. We're very, very happy with the numbers that we've clocked, 1,475 crore revenues, which is not just a 27% growth versus previous year same quarter, but also sequentially it is a 12% growth over the previous quarter, Q3. I think we, at a broader level, we believe we'll continue the momentum of growth despite the hiccups that we see in the second wave of COVID. So while the way I would look at this second wave of COVID and the disruption, I think there are two parts to it. I think first and foremost, our focus is on the health and safety of our people and the communities that we operate in, and we're doing everything to make sure that that is safe and in order. But on the business side, what I believe is, compared to March of last year, businesses overall, and not just STL, but I believe businesses overall are better prepared to deal with it from a business continuity standpoint, from how to handle the vagaries of lockdowns, etc. And in that context, I believe that we are well prepared and dealing with it. STL in particular, being part of the telecom sector, continues to operate at normal levels. I mean, notwithstanding the human element of disruption, which we are looking at. So net, we believe our growth momentum will continue. Our first half of FY22 should be on a growth path versus first half of 21.
All right. Mihir, the order book stands at 10,700 crores. Could you give us color on how the order funnel is looking? Is there participation opportunity rising?
Sure. So if we look at the open order book first, we were at March 21 end, our open order book stands at 10,700 crore, which is a slight growth over March of 20. So despite a difficult year, we managed to keep our open order book flat to slightly growing. And that shows that the demand is quite strong. But a more telling number is the open participation funnel, as you asked, that we've grown from 7,000 crore, which was our open participation funnel in March 20, to now 11,000 and 11,500 crore. And that says and shows that the demand is very strong. As we go forward, we will have closings on a lot of those, and we hope to convert a lot of it into order book and then eventually revenues.
All right. The share of telco in FY21 has risen from 50 to 65%. Will this share increase further, and what could be the likely impact on margins?
Sure. So, telco share in this year or this quarter is an indicator of the projects that have been spread across. And as some of our citizen network and defense projects reach towards the end of its life cycle, and as we've reported, we on 3 of our top projects, we are reaching 90% plus completion stage. So that is a mixed change in terms of balance, that in the revenue, as the defense projects get smaller, the telco becomes a little larger. But overall, I believe that we are going to focus on 4 different categories, and eventually we will see a balance across those categories of customers, telco being one, citizen networks being the other, enterprise being the third, and cloud companies being the fourth. So we see that the balance of our mix will pretty much start reflecting the balance that is in market across these four segments that we see. From a margin standpoint, that is there are too many variables there, not just telco, non-telco. There is whether it is a certain solution, whether it is a value-added product, whether it is services. So margin has a few more variables, and it would move accordingly.
Your manufacturing operating capacity utilization was at an all-time high, and your capacity expansion will be completed by June 21. So what would be the utilization in the near term post the expansion, and what kind of growth can we expect on account of all of this in the next fiscal?
So we continue to expand our manufacturing capacity on the products business, and as you know, we are operating at more than 100% capacity on the cable side and about 70% capacity on the fiber side. We continue to increase that capacity quarter on quarter, the capacity utilization quarter on quarter, and we believe that is going to contribute to our growth as we go forward. From an FY22 number standpoint, at this stage, I'd say that we will, given that the growth in demand is very, very strong, and that is reflected in our open participation funnel, in our order book, we will continue this growth momentum, and H1 FY22 will be growing versus H2 of FY21 as well. I think sequentially also we believe we will continue to grow.
Okay, you plan to cut your gearing from 1 to 0.5x net debt to equity. You've set a target of 10,000 crore revenues as well by 2023. So would it be fair to say that growth in net profit will be higher than in revenue for the next 2 years?
I think it's a little early to say that, simply because some decisions relating to how much we want to invest back into the business is something that we will figure out as we go further. Already our R&D spends as percentage of revenue are at 3% now compared to it being at 1% earlier. So what I would say is we will endeavor, and we believe that our EBITDA margins will remain at 18%-ish. And as we grow on the top line and we invest in new businesses, we will make sure that we balance that out, and we don't focus too much on bottom line without investment, and we make sure we do not dilute bottom line with too much investment. So that's how we want to see it. EBITDA is the number that I would anchor on for my plans as we go forward.
Okay, Mihir, thank you so much for joining us then today on ET Now, and talking to us about the Q4 performance.